Good evening, everyone, and welcome to the Bitcoin.Tax and Crypto Tax Prep by Happy Tax Ask Me Anything on Crypto Taxes conference call. My name's Naomi Black, and I'm the Director of Operational Support with Happy Tax. On tonight's call, we also have Colin Mackie with Bitcoin.Tax, Mario Costanz, our CEO of Happy Tax and Crypto Tax Prep, Knox Wimberly with Happy Tax, our tax department manager, and also James Wilhelm. He's a CPA with Happy Tax. Tonight, if you have any questions, please use the Q&A feature on the Zoom screen. If you are dialed in, you can send an email to me at Naomi, Naomi, at happytax.com. We'll be sure to get those answered tonight. I would like to now turn over the call to Colin Mackie with Bitcoin.Tax. Colin, are you there?
I'm here, yes, thank you. Hi everyone, thanks for joining us this evening. I'm Colin Mackie, the founder and run Bitcoin.Tax. Hopefully most of you know about the service, but we've been around now since the beginning of 2014 and as a capital gains and income tax calculator for cryptocurrencies. One of the things that we get asked a lot is, do you know a CPA? Is there someone that can help me with my taxes? We don't offer that service, but it's quite clear that there's a need for it. So one of the things we've been working to do is partner with a company like Happy Tax that can provide tax advice and tax preparation services. And working together means we can fulfill that need to allow you to file your taxes, calculate it through the Bitcoin tax system, but using a real CPA and getting real advice and making sure everything's done correctly. So with that, let me pass you over to Mario Costanz, the CEO of Happy Tax, who will tell you a bit more about their service and how we're working together, and we can start our AMA. Thank you.
Great. Thank you so much, Colin. So my name is Mario Costanz. I'm the CEO of Happy Tax. I've been in the tax business for 16 years now. And we went from being an independent tax office, doing taxes on the side, to a franchise, scaling to 99 traditional brick and mortar tax offices in 5 states. And after selling that in 2014, started Happy Tax, which is a virtual tax service. We don't have brick and mortar, but we service people using technology and with 100% of our returns prepared by US-based licensed CPAs. I've been in the crypto space for a couple of years now myself, working on a proof of concept outside of Happy Tax. And with that, became immersed with many of the people that were building projects and trading cryptocurrency. And in 2017, when we saw how it finally hit mainstream, people getting involved with trading, we made a big investment into building out a division of Happy Tax that specializes in crypto tax prep. And it comes down to not only being the tax preparation, because cryptocurrency is deemed as property by the IRS, so it's reported just like a stock would. But unlike a stock, there are no forms being sent to taxpayers to neatly include on their tax return. So that's where Colin's tool, Bitcoin.Tax, comes in very handy. It's a great tool that enables a lot of the reconciliation to happen from the various exchanges that are out there. And there are some nuances even with that. A lot of times the data doesn't come in correctly, or there's some manual bookkeeping that has to happen. So our service handles all that for you from end to end, utilizing Colin's tool, which is an amazing tool, and we are really blessed for the partnership and the opportunity to work with him. He's a brilliant programmer and runs a great business there. So I want to really thank him for joining us and helping us to put this together. So with that, we're going to jump right into some questions. Naomi, it looks like they're starting to fill into the Q&A, and you guys can keep them coming throughout the presentation. Let's go to some questions.
Great, thank you, Mario. Okay, first one I have is, I set up an LLC with partners for high frequency trading. How is that income reported? What expenses are deductible?
So Knox, you want to take that question?
Sure. So the good news is If you have partners on an LLC, most likely you're going to be taxed as a partnership. So that's going to go on a Form 1065. It is a separate tax return than your individual tax return, which goes on a 1040. But you can deduct all of your business expenses. So this works particularly well if you are day trading. It works particularly well if you are mining. We can deduct all of your expenses related to that on that LLC tax return, and then the K1s that are issued from that roll over your personal tax return. So if you are doing day trading, if you're doing mining, it may make a lot of sense to go that route.
Great. Thanks, Knox. Besides the crypto-related API documents from exchanges, are there any other documents that I should also bring with me and inform the accountant of?
So if you're going to be preparing your taxes, I would say that the Bitcoin.Tax tool, once all the data is pulled in properly, and the fact that there are no outlier transactions that need to be reconciled manually, and once you've allocated any wallet trades that you've made from your wallet to your wallet at a different exchange, those are generally automatically picked up as sales. So you need to back those out because those are not taxable transactions. The report that Bitcoin.Tax compiles once you have all that data properly reconciled, that is what should be given to your accountant, your CPA, your tax preparer. Please note, everyone should, that over 60% of the tax returns in the U.S. are prepared by unlicensed preparers. So make sure that your preparer is licensed. That's one of the benefits of using Happy Tax, is that all of our preparation is done by U.S.-based licensed CPAs. But that export, the 8949 report, is what the preparer will need to use in order to properly create your tax return. Thank you for that question.
Thank you, Mario. So the Bitcoin broker statement is the same as the 8949, correct?
Is that a function of the tool, Colin? Bitcoin broker statement?
I'm not sure what you mean by Bitcoin broker statement. So each exchange supplies their own CSV, but one of the problems is that they don't know the cost basis. So people like Coinbase, who do provide a beta tax report, but it doesn't work if you have used Bitcoin anywhere else, or if you have bought some and sent it into your Coinbase account. They just aren't aware of it. Even if you've traded on GDAX, they can't reconcile that. So it isn't the same thing, and I would be cautious, because if you have traded in multiple exchanges, or if you used a wallet where you have spent from, then you need to collect all those records together in order to get a big picture of everything you've done, and actually for us to be able to work out what the cost basis is, and therefore work out any gains that have been made.
Thank you. Will my chances of being audited increase simply because I'm legally reporting my crypto capital gains with the IRS?
So I would say absolutely not. The chances of audit in the U.S. are relatively low. The one thing that people need to be aware of and be wary of is, for those of you that aren't sure of this, the IRS has already sued Coinbase, and they've turned over 14,000 people's KYC information. Those people that made more than $20,000 in aggregate of trades between the year of 2013 and 2015. That was the first attempt, or the first. The IRS is going to go after all of the KYC data from all the exchanges. So if the thought process behind that question is, should I not report so that maybe that will help me not to get audited? Not reporting is the worst thing you can do. Reason for that is that maybe a year from now, maybe 3 years from now, but the IRS will get all that KYC data from Coinbase and from all the other exchanges. Even if you note to take a look at the terms of service for just about every exchange, Binance as one example, it says in there very clearly that they will turn over data to government authorities upon request. And the IRS is working on procedures in order to have those requests be required, and the data will be there. And what happens when situations like that occur is that they just go backwards and they hit you with the taxes plus penalties plus interest. So the U.S. law requires that all citizens and residents report and pay taxes on all income, including crypto trades. So you're necessarily, the chances of an audit will not go up by including it. In fact, they'll see that you're being compliant and it's the right thing to do and how you should structure your affairs. Thank you for that question.
Thank you. I bought crypto in 2017, didn't do any buy sell in the entire year. Do I need to report it to the IRS as it's unrealized gain?
The answer to that is no, you don't. When you do not sell, when you just buy and hodl, you have no requirement to report anything. It's only when you actually sell the crypto. And I want to define what sell is. If you do a transaction from Bitcoin, for example, to Ethereum, that's a sale. That's not holding. So coin-to-coin transactions are reportable and taxable. But if you do not have any of those, if all you did was buy any types of crypto and you've hodled onto them throughout the year, then there is no reporting transaction, with one exception. If you have made those purchases and holding those in foreign exchanges, there's a rule called FBAR that was put together by the government to not enable people to fund terrorist organizations overseas. So they require a FinCEN 114 to be filed if you have more than $10,000 hodled in an overseas exchange. So you need to know if it's Coinbase, clearly it's here in the US, Poloniex here in the US, etc. But if it's in any of those overseas exchanges, there is a filing requirement just to report that you have over $10,000 in those exchanges. If it's under $10,000, no reporting requirement. If there's no sales, no reporting requirement. Thank you for that question.
How important is it to be accurate about the price when purchased? For example, I bought with BTC, but I don't know what the price of the BTC was at the time.
So it's vitally important to be accurate. Good news is there's tools out there that enable us to go and figure out what the daily average of that coin was on the date that you did purchase, and the timestamp should show what day it was purchased, so you know that up front. And even if you didn't know how much you purchased it for, we can back into that data for you via publicly available databases. Thank you for that question.
Does HappyTax use Bitcoin.Tax for filing its customers' tax returns?
So we use Bitcoin.Tax to reconcile the transactions from the various exchanges and wallets. Bitcoin.Tax is not a tax preparation software. It's not the what we utilize to prepare the returns. We use professional tax software for that. But Bitcoin.Tax is the premier reconciliation software on the market. So we do utilize them and have a corporate partnership with them in order to facilitate getting the data ready to be then pushed into our tax preparation software. And I will note that our service is not just the crypto-related portion of your returns. It also includes the rest of your income tax return as well. So any other jobs or income that you have are included in our package, as well as access to Bitcoin.Tax for a full year. Thank you for that question.
For folks like me who've bought coin early and largely held, but have recently purchased the same coin to use to convert into another with some pointless trades in the middle to slightly muddy up the water, is LIFO or tax lot allocation the better approach? I clearly don't want to use the cost basis of the coins purchased early on.
So in large majority of cases, the IRS is going to require FIFO. There are scenarios where it can be deemed that you can use LIFO. However, in scenarios like yours in particular, where the IRS may try to make a determination that you're trying to avoid taxes by using LIFO, and that's not necessarily what the spirit of what LIFO was enacted for or enabled for. It was generally put together for merchants that have, stock on their shelves for them to be able to account for the sales of what they, bought last instead of what they bought first. So it's a relatively complicated situation. It really depends on a case-by-case basis. There's a number of factors that go into that. Knox, I don't know if you would like to add anything to that, just in relation to the determination between the two different ways to report.
Yeah, so you do have some options. I think that there are ways to use other things, but there are factors that need to be considered carefully before you do that. For one, you're almost always going to be better for it to be a long-term capital gain. And what I mean by that is something that you held for more than 12 months. So if you held it as a long-term capital gain, then your taxation is at capital gains rates instead of your normal ordinary rates. That can be a huge difference. Depending on your income, for some people, the capital gains tax rate could be as little as 0. And so, each case has to be looked at carefully. But one thing you definitely cannot do is opt to go back and forth. So once you choose a particular way that it's being reported, you pretty much need to stick with that way. And so you need to think about the long-term implications of that. The good news is that our team is going to work with you to figure out the best possible way over the long haul, the best strategies for you to reduce ultimately the income tax that you have to pay in a legal way. Most of the time, first in, first out is going to be the best scenario, but we do look at the total picture.
Thank you. What is the best entity to set up, LLC, S Corp, partnership, etc., when mining and holding for growth?
So that's a question that there's not enough information to answer that question at this time. Essentially, there's a lot of factors that go into that, the number of partners, the profitability, how much income you're going to be making inside that entity. So that's kind of a question that we would take care of on our advisory side, which we include with all of our packages. But thank you for that question. It's a great question.
I have exchanged BTC for various other cryptos. Are these transactions reportable?
Yes, coin-to-coin transactions. Essentially, what happens is, if I'll walk through it. So if you buy Bitcoin and then you're going to trade that for Ethereum, the sale of Bitcoin is reportable and taxable. So it's whatever you bought that Bitcoin for compared to what you sold it for. In this example, for that specific trade, what you bought Ethereum for doesn't even get reported inside that transaction. That becomes its own next transaction, and it only becomes reportable if and after that is sold. So anytime you use crypto to buy other crypto, to trade it to fiat, or to use it for purchasing goods or services, those are all reportable and taxable events. And it could be a capital loss. It's not always a capital gain. So those have to all be reported, and all that data can be pulled into Bitcoin.Tax, and then we, from there, make sure that we report it in the most appropriate place. For example, if you are receiving the crypto for goods or services that you're selling, you then would not include that as a capital gain or loss. You would include that most likely on a Schedule C for self-employment, although we do have a number of people that are actually receiving their pay on a W-2 in crypto, but then their employer has to end up sending a W-2 for the amount of crypto that was sent. So a lot of it becomes down to case by case, but to answer your question specifically, yes, that would be reportable and taxable.
I run a medium-sized mining farm, and we mine upwards of 30 different cryptocurrencies. How would y'all suggest I go about reporting all of my coins, earnings, etc.?
So from the tax side, that's going to be self-employment income. You're going to have the amounts that you mined because you received that become revenue. You'll then be able to write off the direct expenses to that operation, your electricity. You can depreciate your equipment, any of the other items that are specific to that operation, and then whatever's left, you will pay ordinary income tax on. you will also pay self-employment tax, which is the government's way of getting Social Security and Medicare from you. Because if you have a job, you'll have a deduction on there for Social Security and Medicare, and so will your employer. But when you have self-employment income, that's clearly not happening. So this is they do collect that on all self-employment income, and they do contribute that into those respective funds for you. So that's how you would handle that. And Colin's tool, Bitcoin.Tax, does also pull in data from mining.
Great, thank you.
Colin, did you want to add something on that?
I'm sorry.
Well, I was just going to add so the mined coins have to be priced. So when they are imported into our income tab, for example, then we look up, you can just add, say, which coin it was and how many coins, for example. And then we use a weighted daily average price to say, well, this was X income. So it's always calculated per day. I mean, you have to report the fair market value. So what we take that as is the weighted average price that we collect from exchange data. And then we put that in our report section. We can then say this is the income report for all those coins. And also it sets the cost basis of those coins. So when they are spent or traded or sold, we can then work out the gains from that too.
Yeah, that's the secondary piece of that. A great point, Colin, is that you would receive it as mining income, and that is revenue to you. But then when you sell it, or when you use it, spend it, it then becomes a capital gain as well, based off of what it was worth when you got it versus what it was worth when you sold it. Great segue. Thank you for that question.
If I'm doing day trading as an individual full-time and left my day job, where can I claim my expenses?
So if you are deemed as a trader, which is not easy to do, there's a number of requirements that we would go through with you on a specific basis. And if you meet those, it has to be essentially your full-time gig or your most of the time gig. You have to spend the majority of your activities and income earning time spent on that to be deemed a trader. But what happens then is instead of the trades going down as capital gains and losses on an individual basis, they flow into your Schedule C, and you can write off your expenses for the trading activity against the profits right off the top. Thank you for that question.
I invested in Bitcoin in 2016. I've not taken anything out yet, but I've traded different coins during that year. I unfortunately did not report anything for Bitcoin crypto in 2016. What do you suggest I do to make sure I'm compliant with my 2016 taxes?
So if you are, first of all, if you are someone that did some of that through Coinbase, 2015 data has not been yet turned over to the IRS, but it will be. And the way to get into compliance, and it's better to do it up front, and I'll tell you why in a moment, is to amend that tax return, to get all the data compiled, get your existing tax return as it was originally submitted. We can then amend that, or you can amend that, to add in those trades and transactions and then send that into the IRS and pay the difference in what the taxes are. Now, you will also have to pay interest on the amount that was supposed to be due back then. And as of right now, if that was 2016 trades, that was due just about a year ago. So you'll have about a year of interest. It's only 4 or 5%. But by not amending and waiting for them to catch you, you're going to put yourself in the bullseye for additional penalties and interest that you can mitigate by being proactive and amending it up front. Thank you for that question.
If I sent money to cloud mining companies and they folded or scammed me, can I write off that expense?
Yes, in most cases you can. So it depends on the nature of how you sent it to them and what the investment was. It may be able to be written off as a casualty and loss, or there may be other ways to write that off. So we would it's a scenario where we would literally need to look at the context of the investment and potentially even the contract that you either signed or digitally signed for sending them that coin or fiat to make that investment. Thank you for that question.
I have a miner machine with a few cards. Can I just add mining income as 1099 miscellaneous?
Knox, you want to take that?
I'm pretty sure the answer is no, but ask me the specific question again, Naomi. I want to make sure I heard it correctly.
I have a miner machine with a few cards. Can I just add mining income as 1099 miscellaneous?
So it has to basically go to the Schedule C, assuming that you do not have a separate entity. And so the short answer is that it has to go to a Schedule C. A 1099 miscellaneous can report to multiple places. It would not be acceptable to put it as line 21, which is other income. It would need to be reported on the Schedule C.
And the reason for that is because the self-employment tax would not be charged if it was just put as other income. And you'll also be, by doing that, you're taking away the ability to write off the expenses against it. So you're probably better off anyway doing it appropriately and having it reported on the Schedule C.
I was playing around with day trading crypto early last year, only had 2K worth of Bitcoin. By the end of the year, I had $400 loss, but I got a 1099K from broker just now saying I had 850K in Bitcoin. What should I do now? Can I use Bitcoin.Tax site to input my trades? Except for 2 transactions on Coinbase, everything else was on GDAX.
So a 1099K is an informational statement. All it says is that you've traded the amount of crypto in this case, or dollars. It's usually it's a statement that's traditionally been used for merchant accounts. For like if you've had PayPal or you had a credit card processing account, you would get a 1099K and it would show how much you've processed through there. That necessarily doesn't even actually have to match anything on your tax return because there could be other income along with that. Because the exchanges are not set up to issue these capital transactions on 1099Bs just yet, or whatever the IRS determines on how they will eventually have to report. The exchanges, Coinbase, for example, is just sending a 1099K. It's just a total amount of trades that you made for the year. It is not what goes down on your tax return. So what needs to go down on your tax return is each and every transaction, and that would be reconciled through Bitcoin.Tax, and then ultimately flowing in to the 8949, which then flows into your Schedule D, and then that flows into your tax return at the capital gains tax rate. So 1099K just means that the IRS knows that you traded crypto, but do not just take the amount on the 1099K and throw it on your tax return. That would not be the appropriate way to report that. Thank you for that question.
Can I treat the acquisition date of a forked coin as the acquisition date of the original coin, since they are technically the same coin and the ledger is the same up to the point of the fork?
So on forked coins, the date of the fork is when your basis on the forked coin starts. So you cannot use that date as the date of acquisition for the original coin just because they're on the same ledger. They become essentially 2 separate holdings that are reported separately when you sell them. In relation to the basis determination of the forked transaction, generally we're going to go with a basis of 0, although there are other ways to handle that on a case-by-case basis, which we could discuss with you after you join us as a client inside of the accounting portion of our package. There are the ability to divvy up the basis amongst the 2 coins. That may or may not be a good idea depending on what you're holding and what you're selling. Thank you for that question.
I had a profit of $2,000 last year. Do I still need to report it? It was on Coinbase.
The answer is yes. Thank you for that question.
How do I report transactions if I sent coins to a non-existent address?
I don't know what a non-existent address would be, unless that was something that got lost on the chain. Colin, would you have any feedback on that?
Yeah, I think they are meaning that they send it to an address that's not valid, or they didn't have the private key, so they basically lost them.
So if you had some coins and you went to send them somewhere else and they knocked, you want to take what would happen in a scenario like that?
Yeah, so the short answer is oops. The longer answer is that, if you had your cost basis, this is one of those untested things. It hasn't been tested by the IRS yet, and it hasn't been tested in courts. So we would talk with you about the aggressive position, but if you had your basis and we could determine an accurate basis, I would probably be okay with considering that a loss. And so we would probably report that as a loss. Now, if you repetitively did that, then that would be different. If you did that as one transaction out of many, then that's one thing. But if you did that 100 out of 101 times, that's not going to work.
And it's also going to determine on the amount. The IRS is going to take different positions based off of the scenario and the rest of everything. So it's really some scenarios are better talked about in private, and that's one of the parts of the services that we provide. Thank you for that question.
Customers of HappyTax need to provide report from Bitcoin.Tax, or is it taken care of if they provide data sheets from all the exchanges they traded in?
So we prefer to use Bitcoin.Tax. It makes the data usable, puts it into formats that we can make sure that it's accurate. So we will handle that for you if you become a client, or if you already are a client of HappyTax for your crypto tax prep. So we will work with you to have you get your APIs and CSVs into Bitcoin.Tax, and then our bookkeepers will get everything tidied up along the lines of those manual bookkeeping scenarios that have to be handled in most transactions or in most cases. And then we will take it from there into the tax software after talking through the scenarios, the accounting type scenarios on how best to handle your trades to minimize the taxation for you. And then we finalize the return. If you have the CSVs, we can load them into Bitcoin.Tax. If you just provided us with the CSVs of the data, we would be able to take it over from there and handle that for you. It's an all-inclusive package. Thank you for that question.
As a trader without any big expenses, would it be more tax efficient to have an LLC versus filing personal income tax?
So having an LLC is still going to have the capital gains and losses that's going to just flow through to your personal return. So if you're a trader, which as I mentioned, you have to really show a number of ways that is your primary focus. You can't make a couple of trades a day and have a job working 8 or 10 hours a day doing something else and try to take trader status. So if you can determine that, then you are certainly able to take expenses off of that, and you may not have enough expenses for it to even make sense. We look at these scenarios on a case-by-case basis to just make sure that a comparison. All right, this scenario might work better this way, or it might work better this way. There's not enough data in your question to give you a full answer, but it's one of the parts of the advisory and the accounting that we provide prior to preparing the tax return. Thank you for that question.
FIFO is an option with Bitcoin.Tax. Is using FIFO an acceptable method with the IRS?
Yeah, FIFO is actually what the IRS prefers and in most cases requires. And that is an exportable way from Bitcoin.Tax. Thank you for that question.
Can I use HappyTax just for the crypto portion of my return? I have another accountant that has already prepared most of my return.
Sure, you can. The package is still the same. You can certainly hire us to handle all of the reconciliation, bookkeeping, accounting, getting the portion of the crypto ready for someone else that has prepared the rest of your return. But I would be wary in some cases, only because if they're not competent in making sure that the data is ready, they might not know how to appropriately report it. So It's also possible that they're very competent and they can handle it once they're provided with the data, but we certainly can work with you, and you would just our CPAs would not prepare your return for you, but we would do the rest of it for you. Thank you for that question.
Does anything need to be reported if I'm mining straight to a cold storage wallet and not spending, trading, or selling any of it?
The answer is yes. So the IRS requires that all income is reported and taxes paid on it, no matter what source it comes from or no matter where it goes to. Those of you may or may not know, Al Capone went to jail not for all the crimes that he committed, but for income tax evasion. So that would be akin to making money in cash and not claiming it on your tax return. You are required, even if you are sending it to a cold wallet, to still report that. And the IRS has forensic ways. They've hired a company called Chain Analysis. They, if all of a sudden, I guess in this question you said you're not spending it, but if all of a sudden, a couple years down the line, you buy a big gigantic mansion or a, Lambo, and you can get into their crosshairs in a number of different ways, even if the information isn't being reported to them. Thank you for that question.
I have found that when using the different exchanges to get the cost basis, there's a range depending on the exchange. What exchange do you recommend to determine the cost basis for purchases and sales?
Colin, do you want to take that one?
Yes, I think they are asking how to get cost basis. So most of the time, the cost basis is determined by what you traded, and the records that the exchange give you has that information in that you bought X Bitcoin, for example, for so many dollars, and that's there. So we know what the cost basis is. Where it becomes more difficult is when you're trading between coins. So if you're buying Litecoin with Bitcoin, for example, you're effectively selling your Bitcoin for a fair market value, and then you're buying the Litecoin with that fair market value, that amount. So determining what the price is can be tricky. So we use a weighted average across pretty much across the market. So for Bitcoin, for example, we use Bitcoin average, as a source, because they provide a weighted aggregate of all Bitcoin exchanges and say, well, this is what the price was today. So a daily weighted average. You could go in there and say, well, I know I used this particular exchange and it had this price. So you could go in and override that price and therefore set the basis. So really it's about how you set that basis, and correct me if I'm wrong, but if you were doing fiat currency changes, then you can use the source you want to use as long as you use it consistently. And I imagine that would apply for crypto as well.
Thank you. Do taxable gains, losses represented by crypto trades live under the investment income Schedule D section of the 1040?
They do. 8949 is where the trades are entered in, and then that flows into Schedule D. Thank you for that question.
Does cost basis mean the value in the U.S. at the time of sale?
So the cost basis is the amount that you bought it for, plus any expenses of that purchase. So compared to US dollar or fiat in most cases. Thank you for that question.
How are forked cryptos treated? For example, if I buy Bitcoin Cash with Bitcoin, is that a taxable sale?
Well, if you buy Bitcoin Cash with Bitcoin, that's not a sale, that's a buy. So if you bought Bitcoin Cash with Bitcoin, that would not be reportable in itself until you sold that Bitcoin Cash in that example. The question that seems to talk about a fork at the beginning, but then kind of talks about it just being a transaction. So if it's forked, that is akin to a stock split, where you're now having additional assets that you did not have prior to that fork, which then live in relation to their own newly created asset value and basis. Thank you for that question.
What is the difference between Happy Tax and Crypto.Tax Prep? Whom should I approach for what?
So Crypto.Tax Prep is a division of Happy Tax. Happy Tax is the fastest growing tax company in the US, and we have our Crypto.Tax Prep division to service traders. So you will be working, the company name is Happy Tax, but we have a specialty division that handles the traders there. And we'll talk about at the end of this call how to get in touch with us, through contacting us through Bitcoin.Tax, which is going to be the preferred way for those on this call to utilize our service. With a special bonus as well.
Thank you. I purchased Bitcoin in 2013, converted it to Bitcoin Cash in 2017, and used Bitcoin Cash to buy miners from China. I should report my gains on the Bitcoin and the Bitcoin Cash trade. What about the purchase of equipment?
So you're correct. Your Bitcoin sale to buy the Bitcoin Cash is one transaction. Your Bitcoin Cash sale is a second transaction. And then your purchase of the mining equipment would be expenses, depreciation expenses on your Schedule C against that mining income. Thank you for that question.
I profited $2K last year on Coinbase. Do I need to report it even though it's less than 10K?
Yes, you're required to report it no matter how much it is. Thank you for that question. Whether it's a profit or a loss.
If I take my portfolio start balance and then take my portfolio end balance, why don't I just subtract the two, that's the gains, and pay whatever my tax rate is on that?
Because that's not the way it works. The IRS requires it property when it's sold, and the numbers wouldn't work out anyway. The numbers would be different if you did that versus if you did it the way that is required by reporting each transaction. The value of your portfolio is not the determinant in any case because it's only when you're selling transactions that it matters. Thank you for that question.
Is it possible to use the 1031 exchange rule for cryptos? If no, why not?
So we feel very strongly that 1031 exchanges are not allowable for crypto trades, and I'll tell you a number of reasons why. First off, if you look at other comparable assets, you cannot use a 1031 exchange for stocks. You can't take Microsoft stock and trade it for Facebook stock and use a 1031 exchange to defer capital gains. And that's all that really is deferring capital gains if you were to use that. So that's the first reason. Same thing goes for gold to silver trades. You wouldn't be able to use a 1031 exchange there. The next reason is that a number of organizations have petitioned the IRS for clarification on this. The IRS has put out one notice in 2014 regarding crypto taxation, and it was silent on this matter. A number of national organizations, including the AICPA, have requested that the IRS give some specific guidance on this. The IRS for years has not answered. Now, it would have been easy for the IRS to just say, yeah, sure, you can use it, but they didn't. So that generally means that they are not going to allow it. The next thing is that the quote-unquote tax reform that was passed earlier this year that only changed taxes for 2018 forward made very clear the government's intent that 1031 exchanges can only be used for real estate. Now, again, they didn't change any of the law in 2017 with that tax reform. So finally, in order to do a 1031 exchange, you would have to send in your trades anyway and say, hey, I did these trades and I'm exempting myself, deferring the capital gains on these trades, and I'm claiming 1031 status. And we feel very strongly for all the above reasons that if you did that, the IRS is going to send you back a letter and say, nice try, but we're going to charge you taxes on this, plus penalties and interest. So, we've got legal opinions as well that state that this is not a viable solution for 2017, and it's clearly not for 2018. It's unfortunate that one major news publication put out a clickbait news article headline that implied to people that the status changed for 2018. It never changed. It was never applicable or allowable in previous years. And again, as Knox mentioned, one of the other things, there's no precedent for any of this. So you're welcome to try. We're not going to put any of our clients in harm's way by letting them try. But it's the same complexity there, and you're setting yourself up for getting a letter from the IRS in our eyes, and we don't feel that it is going to be allowable. So, and definitely isn't moving forward in 2018. Thank you for that question.
I use multiple cloud mining platforms, Gigawatt, and about a dozen different global exchanges during last year. My question would be, bottom line, how robust is your Bitcoin.Tax, and can it handle that much input?
Colin?
Well, it depends on the number. So we have a tiered approach because it does take a while to go through these. So for income, it's one thing, and one thing we do is aggregate them on a daily basis. So depending on how many there are, we've had clients that wanted to import their mining income, and they had lots of small dust, but we just pulled those all together on a daily rate, and then just kind of calculated those. For trading, then we have a tiered approach to handle how many trades you can import, and the current system for the consumer system is up to 100,000, and we're working with individuals who can handle more than that.
Thank you. Do you have to create a different account on exchanges under your LLC in order to file taxes as that LLC?
Yes, you would. So you can't have accounts in your personal name and then just have that information flow into a corporate return or a partnership return, which is where an LLC would file if there were multiple members. The transactions have to be in the name of that company, so you'd have to go through the KYC process with the exchanges in the name of that company, and then you'd be able to utilize that for reporting purposes there. Thank you for that question.
I received a 1099K from Coinbase, but this seems to assume that I'm running a business, but I only personally day traded a bit, which surpassed the 20K 200 threshold. Am I to treat this as a business income? I traded between all pairings. It sounds that all of these pairings are reportable in both directions. What about transferring coins or USD between GDAX and Coinbase?
So the first part of the question is regarding the 1099K. That does not imply that you report this as business income. All that is an informational statement, and you will still report those as capital transactions. When you're moving your coins from Coinbase to GDAX, for example, as you mentioned, those are not reportable and taxable transactions. Although the reporting in most cases will show them as sales, and they have to be backed out so that you're not charged tax on you moving your assets from one wallet to another. Thank you for that question.
Any idea at what rate mining equipment depreciates since hash rates are constantly rising?
Knox, I think I'll let you take the depreciation part of that. I don't know that the hash rates are going to be that relevant in relation to the depreciation. It should be the useful life of the equipment, but Knox, I'll let it take you from there.
Yeah, so I'm going to sort of answer that in two ways. And actually, I'm going to let James catch in here too. He's one of our CPAs. But depending on the amount that has been spent, in some cases, you can actually Section 179 it, which means you can deduct the entire amount in that year. And that might or might not make sense, depending upon the amount of income that you have. And so we're going to analyze all of that for you, but there are multiple ways in which you can take that. And so you can depreciate that over time. You can depreciate, in some cases, half of it now and the rest over time. And in some cases, you can actually take the entire deduction in the current year. But again, that's a case-by-case basis that we would need to look at, and that's one of the things that we would do as a part of that analysis. James, do you want to say anything further on that?
Yeah, I mean, it would be, you know, you have the new, you know, the tangible property reg. So depending upon the cost, you might be able to expense it, but, you know, depending upon the capitalization policy you have in place. But, you know, yeah, as you said, you know, Section 179, you know, would typically apply, and it's a facts and circumstances type of situation.
Yeah, so the bottom line is we're going to help you analyze that specifically. And we're going to, you know, that's a part of the service that we will provide, obviously, if you're a client of ours. And so it's not just a straight do it this way answer in every case.
Thank you. Do you see issues filing a Schedule C form for the mining rig I have if I'm on a temporary work visa? Knox?
Well, I could think,
Okay.
The reality is, whether you're a U.S. citizen or a resident, you are required to report all income. So I don't see any issues whatsoever. And Knox, if you have anything else to add to that, I'd certainly love to hear your input as well.
You're correct.
Thank you.
If someone didn't set aside money for taxes while day trading, could a scenario arise where that person ends up in tax debt when the market crashes?
Absolutely. So, you know, one of the benefits of joining our program, our platform, is that we're going to help you throughout the year to know what your future tax liability is and report that, and send in estimated taxes quarterly, so you don't end up getting hit with a big tax bill at the end of the year and saying, whoa, I didn't anticipate this. But in theory, people that had a really great 2017 did not put away any money for taxes, didn't remit any of those estimated taxes. And by the way, there's interest that gets charged if you have more than $1,000 in taxes that you should have paid that you didn't via estimated taxes. So, and in theory, your portfolio may be down right now, like many people's portfolios are, because the market has tanked over the last 30 to 45 days or so. And you may have to sell some additional holdings in order to pay off that tax liability, or we can, you know, work with you and the IRS to set you up on a payment plan, depending on the size of the liability. But in theory, what you've asked is definitely possible. But being proactive moving forward can definitely avoid that. Thank you for that question.
I want to clarify that just a little bit. So if you do end up owing more than $1,000, there are actually penalties associated with that. And in some cases, we can mitigate that or get that completely eliminated. But again, that's something that we would need to work with you on. And there is a form, it's actually a 2210, but there is a form that we can attach to your tax return to minimize that, and in some cases get rid of it. So that's an advantage of having a service that's going to work with you and help you minimize your liabilities all the way around.
To expand on that, Knox, you're right about annualization. You know, it depends on when the income or loss was gained during the year. So if you had, you know, for say, you know, the income was gained during the fourth quarter of the year, you're not required to pay estimated taxes until the income was earned. We can, you know, fulfill the 2210 and annualize that income and, like you said, mitigate any possible underpayment, penalty, and interest.
Thank you. Which Happy Tax site is legitimate? GetHappyTax.com or HappyTax.com?
They both are. So GetHappyTax.com talks about our business opportunity for franchisees to join us and go out and build a Happy Tax business, doing business development. And HappyTax.com is for consumers to learn more about the service and actually becoming a tax client. Thank you for that question. They're both ours.
Does the Bitcoin.Tax site give all data needed for the 8949, or is more work needed to fulfill that form?
Colin, you want to take that?
Yes in that we have all the information that is needed that's reported from the exchange. So as far as we know, then your cost basis, your date of acquisition and your date of sale, and the amount of proceeds and therefore your gain is all the information that we actually have. That's all you can get. So that's what we include on the form. Because these exchanges don't report a 1099, then we use we pre-tick boxes C and F depending on long and short-term gains. So we can provide that as the form, or you can download it as the attachable statement. Then you can then pass over to Crypto.Tax Prep, and they can take it from there, and they will fill it in themselves too.
Great, thank you. When can I use other methods than FIFO, e.g. LIFO, or more exotic methods like HPFO?
Was that the end of the question?
Yeah, I'm sorry.
Yes. So we're not going to talk about exotic methods here on this call. There's definitely tax planning and strategy items that are deep depending on the situation and when they are called for and when they're legitimate. We will implement them in order to do that, make sure that you pay the least possible tax. But it's too broad a question and detailed an answer to talk about here. So thank you for that question.
Have you discussed rates for Happy Tax packages, or is that information you share on a case-by-case basis?
We can actually discuss them, and what we're going to do is, because we're closing in on an hour, we're going to talk a little bit about that and may stay around a little bit after that just to keep on taking questions, but we want to respect everyone's time that has joined us here. So I'm going to share a screen that will help us to talk through what that is. So at Happy Tax, our Crypto.Tax Prep package, as mentioned earlier, is all-inclusive, end-to-end. You get the Bitcoin.Tax solution for 1 year. You get all the bookkeeping manual reconciliation that's required, the accounting, the advisory, as well as the full tax return preparation. The base price for that is $750 one time, and as mentioned, that includes your full federal and state tax return for all income. It includes up to 5 exchanges and up to 1,000 transactions. If you have more than that, there are some different packages or add-on fees that would be applicable. The full 8949 is reconciled, reviewed, and reported. If you have more than 5 exchanges, the add-ons there are $50 each exchange, just because it's extra work for us to make sure that all that stuff gets reconciled. Or if you have over 1,000 transactions, it's $50 per additional 1,000. If you are mining, there would be a $150 charge for the self-employment Schedule C. And then if you do have money in overseas exchanges, you would have the FBAR requirements for filing FinCEN 114 at $50 per exchange there. And note that the penalties for not filing FinCEN 114 if you have money in an overseas exchange, and these are steep because they were put in place to stop people from funding terrorist organizations, are a minimum of $10,000 per exchange per instance. And there could be up to $100,000 if you're willfully not disclosing holding money in an overseas exchange or institution. So if you are interested in having us to provide this service for us, we're going to give $100 off of any package that you want to use, and you could use coupon code Bitcoin.Tax 100. And in order to get that, you will have to go through this specific link. You're going to go to Bitcoin.Tax/Crypto.Tax Prep. Do not go to directly to our site in order to achieve this discount. You'll need to go through that link and use that coupon code, and that is how you do business with us. The process after you join the program, after you check out, is that one of our Team members will contact you within 24 hours, get you started on the process of, if you already have a Bitcoin.Tax account, linking that so that we can work inside of there and reconciling everything for you, or we'll be signing you up and walking you through how to get the data pulled in via APIs or CSVs. And after we reconcile all the transactions, we will have you go to submit the rest of your income documentations. If you've received all that already, great. We can get you done 1, 2, 3. Once the reconciliation is done, you may be waiting on other forms from other investments or mortgages or other companies that you might have. And then we prepare your return, show you a copy, walk you through it, get you to sign, and we electronically file everything from directly to the IRS. It's a simple process. It's turnkey. It's no hassle, and we're here to make sure that we help you get it done right. All of our work is guaranteed. If there's a mistake on a return, any penalties and interest that are incurred as a result of any mistake that we make would be paid by us. And so you have nothing to worry about. You can sleep well at night knowing that you're dealing with specialists. And there are clearly some other accountants and CPAs that do know how to do this stuff. Many of them are smaller shops and do not really have the bandwidth to take on many new clients, or they're charging substantially higher than us. Or there are many, just like one of the questions here tonight, people that have no idea what crypto is or how to handle any of these reconciliations or many of these nuances. And you should be weary of utilizing someone like that or letting them try to get up to speed just for your tax return. Because you know, we've got a really great group of specialists that have been immersed in the space, and you know, great partnership here with Colin and Bitcoin.Tax to make sure that we run this scenario for you seamless. We don't want you to have to worry about is it done right. You're going to know it's done right if you choose to do business with us. By all means, if you want to do it yourself, go for it. But you know, if you make a mistake, you will get hit with some penalties and interest. So I'm willing to stay around and answer some more questions. Colin, I don't know if you have any words that you want to add to that, and if you want to stay around and answer some more, because it looks like there's a substantial number of questions in the queue, or if you have to go, that's also cool as well.
No, I'm fine to stay around. That's fine. Yeah.
Cool. We got some more, Naomi?
We do. What about airdrop tokens? Do they need to be reported as income? Often the value is so low it would be cost prohibitive to unload them due to fees.
Airdrops are interesting. I would most likely basically you would not claim anything until you sold them. It's basically like you're getting a coin with a zero cost basis. And when you sell that coin, because it is deemed as property. So if you're given property, which is essentially what an airdrop is, there's no requirement for a reporting of that at that point in time. So that's how airdrops are handled. Thank you for that question.
If I hire HappyTax to reconcile the crypto portion of my taxes to turn over to my regular CPA for the final return, how far in advance do I need to get with HappyTax regarding this? I pay quarterly taxes, so do I need to work with HappyTax on a quarterly basis?
So in order to get the information reconciled, it depends on a number of factors, but generally it's going to take anywhere from 1 to 3 weeks. Just by the time that you sign up, we have an intro call, we get you linked into the tool, we have some time to deal with those manual reconciliations that are necessary, and then get everything prepared and ready to be turned over to you. Also, if you do join us and you want to utilize the other outside accountant, and you still get the advisory included with the package, so we'll work with you to look at your trades on a quarterly basis and help you determine, all right, look, you've got X profit, you really need to send in X in estimated taxes. So you can work with us quarterly as well inside of that package. Thank you for that question.
What if I bought a car with Bitcoin?
Was it a Lambo? So If you buy a car with Bitcoin, or it might be Ethereum that you would buy the Lambo in. That's the Ethereum group that wants to buy Lambos. It would just be a sale of that Bitcoin. Same scenario, just like we've talked through this evening, where whatever you bought that Bitcoin for is subtracted from what you sold that Bitcoin for, and it is a capital transaction of that Bitcoin, and the actual purchase of the car is not necessarily reported. Thank you for that question.
If I make a trade on my exchange account with a relative's crypto on their behalf, does that trade go on my tax return or theirs?
So if a relative gives, there's a couple different ways this can be handled depending on the nature of the transaction. But if they gave you the money as a gift and you bought it, essentially it would be reported on your transaction. If you gave it back to them, then it would be reported on their return. So there's intricacies that go along with that depending on the specifics of how much it was, when it was, the nature of how it was held, and the nature of if it was given back to them. So that's something that we'll work with you on a case-by-case basis. But generally, it can't go on their tax return if you're holding it. But there's other ways to report that after the fact. Knox, anything to add on that?
Yeah, just also remember that if you are gifting anything really, but if its value is more than 14 or 15,000, I say that depending whether we're talking about 2017 or 2018, then you could also have a liability to file a gift tax return. And so just be aware of that if you are gifting or if your relative is gifting to you, you want it to be under that amount that I just mentioned. The good news is if you're filing married, filing joint, you can double that. But you want it to be under that amount in order to not have to file a gift tax return as a part of that.
I would guess that only 1% of, I would guess that only 1% of crypto holders know how to pay their crypto taxes, and most are not going to hire a CPA for it. How is the IRS going to handle the widespread non-compliance?
So we feel differently that under 1%. We've gotten a tremendous amount of clients that do want to be compliant and are filing their crypto taxes. We've also heard from a handful of people that say, hey, I'm not doing it. The IRS has the most advanced computer systems in the world. They process over 150 million tax returns each and every year. They handle billions of information documents that are sent to them from every financial institution that exists, as well as every employer that exists, and payroll providers, student loan companies, mortgage companies. So having the ability to handle this really just becomes a matter of time. And the bad news for those that want to not claim their transactions is that if time passes and then the IRS catches up to them, it's not only pay the taxes, it's pay the taxes plus penalty and interest, and in many cases fines. And if you're, tax evading on a large scale, there could be criminal prosecution as well. The IRS has a criminal investigation division where they've already gone after crypto traders and people that use Bitcoin, local Bitcoin, to try to circumvent any paper trail of their transactions. So I would say be careful and do the right thing and follow the law, claim it. In relation to the IRS's capabilities, not only do they have that, but all they need to do is get their hands on the KYC data, which is something that they're actively working on. They've already shown by the first strike at Coinbase and their data. And this is much like in the 2000s when Swiss banks were helping people to evade taxes. And eventually they came down on UBS, filed a suit against them, and then shortly thereafter, over a number of years, all the other banks ended up turning over all their data on the people that were tax evading by using those Swiss banks. The same thing's going to happen here. And the information's all in the chain. So the reality is they can just, they've already hired chain analysis to provide them with data and start to build out systems in order to go backwards and very easily, just much the way Colin's tool reconciles everything. They can do the same thing once they have access to the KYC data and the wallet addresses, because all of the transactions are on the chain, and they can be recreated into transactions, and they will not let whether right now is a couple hundred billion dollar asset class, or if we get back closer to $1 trillion, they're not going to let these trades just go untaxed. So the reality is, we feel that that probably less than 20% of people won't file and claim their crypto, because the large majority of people are law-abiding citizens and don't want to have to deal with potential garnishments and asset seizures, which is what the IRS does. If and when they catch up and they get your KYC data and they have scoured the blockchain for your transactions, they send you a letter. They say, hey, you owe us X. And if you don't pay them X, that's what they do. They will seize your assets, your bank accounts, your accounts with the crypto exchanges. All will and have already turned over to government authorities crypto from people that had liens against them. And it's just a problem that you don't want to have. So the IRS is very well aware of this. We have contacts inside of the IRS that give us information as to where they're at. And I can tell you that they are diligently training their agents regarding looking out for this and how to start building out the systems regarding the audits and collecting the taxes. So the good news is we're here to help. Great tools like Colin's make it relatively easy. Our team of bookkeepers and CPAs take it from there and help you to be in compliance and not have to have any of those worries. Thank you for that question.
If someone didn't set aside money for taxes while, oh, I think we already asked, that was a duplicate question. Sorry about that. I'm not a US citizen and here on a work visa. I bought crypto when residing in the US and sell it later after I move to another country permanently. Then do I have to report or pay taxes to the IRS?
Knox.
I'm going to actually let Jim take that one, and then I'll probably chime in afterwards.
Yeah, that's going to be, that's going to come down to the treaty. I mean, that's going to come down to the treaty between the United States and whichever, country you reside in. There may be some withholding, there may be some reduced withholding, but again, that's going to be something you would want to consult us on the exact treatment of that. And to follow up on what Mario said before about underreporting the cryptocurrency, a lot of people, have this tendency of believing that there's a 3-year statute of limitations on the IRS to come after you for underreporting. But if you substantially underreport, that actually extends out to 6 years. So if you're, thinking, okay, I'm not reporting my crypto and I'm, 3 years has gone by and I'm in the clear. But if you're substantially underreporting, that extends out to 6 years. So that's just something, for clients to keep in mind. But as far as a foreign national, it's really going to come down to the treatment with the the treaty between the United States and the specific the country that the person is a citizen in.
Yeah, so the short answer there is it does depend on the country, and I don't think the country was a part of that question, but you would likely have a reporting requirement, and we would work with you to figure out exactly what that would look like depending on your specific situation. But even in the case of treaties, you often would need to report it, and then we can take care of mitigating or in some cases completely eliminating that liability. There are some cases where you don't have to report it. But that's definitely something you're going to want to check out with us or with someone else who can help you through that process.
Thank you. Are wash sales something we need to be aware of in crypto trading now or in the future?
So wash sales are not applicable to crypto. What wash sales are is if you're going to attempt to sell a coin in order to create a loss, but then buy that coin back a couple days later, up until 30 days, you would not be able to take that loss. So wash sales is actually a negative scenario, and in the case of crypto, it's not applicable because it's clear in the code that it's applicable only to securities, and crypto is not a security, a stock. Thank you for that question.
When receiving BTC and other coins from websites such as Free Bitco or from coin faucets, how should they be reported? Are they miscellaneous income or something different?
So they would not, I would think they probably would be miscellaneous, but we might have to talk with one of our CPAs that has done clients with faucet income. Generally, it's not a lot of money that's being trickled down from a faucet. It's usually minimal. Knox, do you have any data on that? And if not, that's a question that we can just get answered after the fact.
I do not.
Okay, cool.
That is something I'd have to research.
And that's one of the things about taxation, is that there's a lot of outlier scenarios, and having a group of accountants and CPAs, if we don't know the answer on the spot, somebody else on the team will, and if somebody else on the team doesn't, we will research it and get you that answer so that we can make sure. I mean, we're guaranteeing every tax return that we do, so we need to make sure that it is done accurately. But thank you for that question.
I'm going to file my crypto to crypto transactions as not likewise for year 2017. If the IRS later considers crypto to crypto as likewise transactions in 2019, then can I get back the tax that I paid for year 2017?
So I think you meant to say, the question meant to say like kind, which is 1031, which is not allowable. So it sounds like you're following the advisory that we've given here tonight and not reporting it that way. They would never backdate a law and say, hey, everything in 2017 is now going to be allowable. And the law that they did change for 2018 to state that like-kind exchanges are only applicable to real estate is for 2018 and forward. So it's unlikely that there'll be another major tax reform, or that they would say, hey, we want to go ahead and change this moving forward, and it definitely will not be changed moving backward. I will say that, and many of them on this call should seek them out and should support them. There's two congressmen that have come together in a coalition to call themselves the Blockchain Caucus, and they introduced a bill on the floor of the House last year to have what's called a de minimis ability to exclude up to $600 in crypto trades that are being used incidentally. Because right now, if you use crypto to buy a cup of coffee, that's a reportable transaction. And these two senators introduced the bill. Unfortunately, did not get through to be passed. They then tried to include it in tax reform that was passed, but it did not make it into that bill. So I urge everyone here to seek out the Blockchain Caucus. They're online. Let them know that we're there to support them. We want to make this simpler. The systems are getting better on the technology side for reporting, reconciliation, and taxation purposes. And Colin and his team and our team are part of defining that. But we also have a voice, and we should all think about getting behind that and trying to get some additional simplicity that would help crypto traders to not have to deal with every single purchase when you're buying something small or trading something small, to have that reported as well. Thank you for that question.
If I get audited, will you handle the issues with the IRS on the crypto tax you did for me?
Yes, audit assistance is included with the return at no additional charge. Thank you for that question.
You guys seem very knowledgeable, but as I understand it, we won't be working with you directly, but a member of your franchise?
So, well, First of all, I'm a very hands-on CEO, as is Colin at Bitcoin.Tax. So I'm always available to our clients. I mean, I'm here to serve our team members, our franchisees, and our clients, as are our CPAs, enrolled agents, support people. So we're all accessible. We're here for our clients. And we only bring in people that have specialty and have highly trained on crypto and taxation. So you're in good hands. But if anybody ever needs me, I communicate with our clients relatively often when needed. But my team does an amazing job, so most of the time I don't have to. But thank you for that question. And I will say that if you are working with us on the crypto tax prep side, you may not have to go work with one of our franchisees. You can work directly with our tax team by signing up online through Bitcoin.Tax/crypto tax prep.
If I have a question, which I prefer to ask privately, who would I direct that to?
You can send it to me. You can send it right through our site. After you go to that link, we have Facebook Messenger built into the site, so you can communicate directly with our team. You can either ask the question there, or you can ask for a consultation there if that's going to be necessary prior to signing up for the service. And if it's a detailed question that we may need to research, we will provide that inside of the advisory once you're a client. Thank you for that question.
Can costs for sending from one exchange to another be included in cost basis?
Yes, those increase your cost basis, so that minimize the amount of taxes that you have to pay. So you won't be paying taxes on the expenses of the sale. They would be used to reduce that taxed amount. Thank you for that question.
Do you provide your clients with any strategies for deferring capital gains tax?
Well, the only real way to defer capital gains tax would be a 1031, and that's not allowable. But we do have tax minimization strategies, and it really comes down to a case-by-case basis. You have to kind of look at the overall picture of where you're at, what bracket you're in, what type of activities you're doing, the volume, and from there we in most cases can advise, and that's part of what we do, on how best to structure your affairs for taxation purposes. Thank you for that question.
Can you please repeat the coupon code and the link?
Sure. The coupon code is Bitcoin.Tax 100, and the link is Bitcoin.Tax/crypto tax prep.
Thank you. Do you accept crypto Bitcoin as payment for services?
We do. So when you check out, you can pay either by fiat or by Bitcoin. At this time, that's the only crypto that we accept. We have it built through payment processor integration with Stripe. I will say that Stripe has decided to end their integration in May. So we will continue that, taking it through that means. And we will probably go back to BitPay, which we were with before, after the tax season, but we won't make that change now. Stripe has had some difficulties because of the slow processing times for Bitcoin transactions and the high fees in making the transactions go smoothly. So we've got a number of clients that have paid us in Bitcoin, but keep in mind that that is a reportable transaction. So if you pay us in Bitcoin, that becomes one of your trades, and you may end up paying taxes on that. So you may want to think about hodling your crypto and paying us in fiat, but by all means, we have the abilities there. And then we have a number of, if we can accept any crypto on a one-off basis. We won't do it for our $750 package, but we have a couple of high-frequency traders that have paid us in a number of other cryptocurrencies just by providing a wallet address, which we don't do publicly. We'll talk about on a case-by-case basis. Thank you for that question.
On Bitcoin.Tax, how do you see transfers when the exchange data is downloaded? I only see buy and sell.
Yeah, so we deliberately ignore transfers because they are not tax events. So we don't import them. We treat all your coin holdings as one. You generally don't see them, and you generally don't have to worry about them. The only exception to that is if you are making, transferring between your wallets, you may be paying a network fee, and most of the time, historically, that's been negligible. But maybe in the last year that you need to enter that in as some spending because you just move things around. With the exception if you were moving it to your exchange to sell those coins, then you could add it into your cost basis. But yeah, generally we just ignore transfers because they're not relevant.
Thank you. How long would the whole process take from the time I submitted all my documents, CSVs, to filing? Mentioning approximate times would help too.
So generally it's 1 to 3 weeks. It really depends on how quickly you get us the rest of your data. You do have to get us all of the other income data. We have a very easy intake process there as well. We've got a very good a website that enables you to enter in your information, basic information, upload your documents, and then send that over to us to be added in with your crypto transactions. In many cases, there's slowdowns waiting for the data, waiting for questions to be answered, or waiting for the rest of the income data to be sent to us. But with that said, in theory, we can have it done in a week if everything moves forward and you get us everything we need. Our turnaround times are very quickly once we have what we need. Thank you for that question.
If I purchase a package, do I get an actual person I can deal with and talk to?
Yes, absolutely. You get a whole team of people that you are able to talk to. You get an account representative to answer any questions that you have along the way of the process. But we have a very easy to follow process of here's what happens next, here's what happens next, here's what happens next along the way. Any questions that you have, whether it be via email, via chat, or via phone call, we provide a full service solution to make sure that you have any questions you have answered. Thank you for that question.
Can the cost of the package be deducted?
So for 2017, you can. Knox, do you want to take for 2018 forward?
I'm sorry, ask the question again. I was actually looking at another question.
Yeah, so the question is, can the cost of the package be deducted, the tax prep fee?
So in 2017, yes. In 2018, the answer is no if it's being filed on the 1040. If you are having to file, if you are mining or some other sort of self-employment type income, then it would potentially be deductible, or at least a portion of it there. But one of the changes that actually came in the new tax reform bill is that tax preparation fees are no longer deductible. I disagree with that, obviously, but Congress didn't ask me.
Thank you. I'm going to get some, I'm going to get some type of return on my regular income. What would happen if I file my taxes now, get the return, and then file the amended taxes after getting the refund to pay any necessary taxes that I may owe on crypto? Is this a bad idea in general?
Yeah, it's definitely a bad idea because amendments have a higher percentage of audits than filing it properly the first time around. Plus, depending on when you file that amendment, you may have penalties and interest that are also required to be paid back. So essentially, you'd be juggling the money anyway. You would get the refund, and then you'd have to pay the refund back or a portion of the refund back, plus potentially penalties and interest, plus you're opening yourself up for more likelihood of an audit by doing it that way. So I would recommend that you just submit it. And also amendments have to be mailed in. So you can't electronically file them. And now you not only have the IRS's computer systems looking at your return, which look for irregularities and red flags, we also have a human being looking at your return and saying, oh, they decided they had the crypto in, maybe we should take a closer look at this. So although it's possible to do it the way you described it, and it doesn't necessarily mean that you're going to get in trouble, it could just put you in with some more headaches along the way if you go that route. And you got to pay an amendment fee. So better off just doing it once.
Do you offer as part of your advisory services information on tax loss harvesting?
Yeah, we can. That's one of the things that we can talk about if it is something that makes sense for you. Tax loss harvesting, for those that don't know what it is essentially selling off positions in order to book the loss that will then offset future gains. It is on a case-by-case basis something that could make sense, and it is part of what we would advise you on. Thank you for that question.
With the recent IRS guidelines that came out, did the tax benefits of buying physical property with crypto go away?
I don't know that there. Knox, do you want to pick up on that? Because I don't know that there was any tax law changes that affected crypto in any way, shape, or form.
Yeah, that is correct. There's really not. The only thing that could potentially, or that some people have said affects, is the 1031. But as we have stated before, we don't believe that the 1031 exchange is a viable option or even an acceptable option. We feel pretty strongly about that. It's not even acceptable for securities in general. And in my opinion, there is less than a 5% chance that it would be deemed acceptable in a tax court for cryptocurrency. And so obviously we're not going to advise you to do anything that we think has less than a 5% chance of being successful. That would be, frankly, malpractice. And that's not what we're about.
Is proof of stake income handled differently from proof of work mining income?
To my knowledge, no. We may have to do some more research on that. But mining income is mining income, and it is required to be reported for self-employment income purposes.
So to be clear, I can use Litecoin for 2017 or I cannot?
You cannot.
Could you be more clear on where we go to sign up? Is it Bitcoin.Tax or is it Crypto.Tax? And I actually put the link in the chat. So if you go to that, you will be able to see that link there.
And it's Bitcoin.Tax/Crypto.Tax prep. That's in order to be able to get your discount that we're providing through Bitcoin.Tax.
Would simple consultation with Happy Tax allow me to figure out the forms that I need to file in order to complete my own return, or ultimately do I need to purchase one of the packages in order to get this type of consultation?
So we're not going to give specific advisory on your circumstances if you're not a client. In fact, we can't. So we're more than happy to give free advice, as we're here doing tonight. If you have a basic question, I'm more than happy to help you just in terms of being a service to the community. But again, there's a lot of complexities here, and but part of our offering is not to give advisory so that people can go do their taxes themselves. It's for purposes of providing this professional service to people that need it and want it. So there would be a limited amount of advice that we'd be able to give you if you weren't a client, but we're more than happy to help out in any way we can otherwise. Thank you for that question.
Will this recording of this webinar be available for me to send to a friend?
It sure will. And we were going to get this out as a recording to everyone that attended, and you'll be able to share that at that point. And Naomi, I think we got time for one more question because we're going pretty far over in relation to how long we anticipated being here. And I know that we are not going to get to all the questions that are still in the queue. So you can email those in to us or send them in through the chat on our website or use the Contact Us tab there, and we'd be more than happy to help get those questions answered for you. So one more, Naomi, let's wrap this up.
Okay, so I've seen a couple questions that they're asking about the fee for the services provided. So could you maybe explain a little bit about the fee?
Sure, the fee is a one-time fee for the year that includes the full tax preparation, federal and state return, and all of the reconciliation that's required for cryptocurrency purposes in order to properly report that on your tax return. So it's full service. It's every one of our returns is prepared by a US-based licensed CPA and guaranteed. So it's kind of set it and forget it from your transaction. It's not do it yourself. It is professionally prepared for you. And we work with you to get that data into Bitcoin.Tax. We reconcile it, and then we file your complete tax return for you. And throughout the year, you'll have access to the Bitcoin.Tax solution. And we are also there to help make sure that you file those quarterly taxes to avoid the interest if you are making money in crypto. And let's hope that the market turns around as it may be after quite a big dip recently, and everyone can get back into earning the types of profits that were earned last year. So it's normally the base package is normally a one-time fee of $750 for the year. With that $100 coupon off, we'll bring it down to $650, all inclusive, bookkeeping, accounting, CPA tax prep, and advisory. Thank you for that question, and I want to thank everyone for joining us tonight. I want to thank our amazing team, and most importantly, I want to thank Colin Mackie, the CEO of Bitcoin.Tax. Colin, any final words for you?
Yeah, thank you very much. It's been an interesting, excuse me, been interesting to see the kind of questions I get. So I think, as I said right at the beginning there, that we got questions asking people how they do this. So I think the partnership with Happy Tax and Crypto Tax Prep really does give people a way to get some professional tax advice if they've been trying to work out how to do their own taxes. One thing I wanted to point out is if a user has an existing Bitcoin.Tax account, you can still go to Crypto Tax Prep and provide them with the information, and they can link into your existing Bitcoin tax account with your permission. It will send you an email letting the two systems link together, so that then the CPA can see your data. If you don't have an account, then you just go to Crypto Tax Prep, and you can either give them the information and they'll do it all for you, or between you can agree to, they'll set you up a Bitcoin tax account, and either they'll import the information, you give it to them, or they may request that you import information. For example, if you use Coinbase or GDAX, where you have to use API keys to import that data. So I think together we're really having a way to help people get this information in, and then put it over to licensed CPAs to do taxes properly. So I'm really happy that we're working together. I think it's a great service.
Great. Well, thank you, Colin, again, and thank you, Naomi, for handling all the questions. And have a great night, everybody. Take care. Bye-bye.
Bye.